Hello, clients and friends. This is Billy Doty from Doty Financial Group, and it's my pleasure to welcome you to our 2021 Investor Outlook presentation. Today's agenda is very straightforward. First, we will share with you a review of equity markets. Then we will discuss a 2021 outlook for investors. Before we begin, it is always important to review that there are 5 key areas of financial planning. These areas are preservation planning, retirement planning, tax planning, estate planning, and investment planning. As a comprehensive financial services firm, we try to always consider the impact of any recommendation we make on not just one, but all of these areas for our clients. Today's presentation will be primarily focused on investment planning and equity markets. As a quick review, the U.S. stock market ended 2020 at all-time highs. After a waterfall drop and the quickest downward decline of the century in March of 2020, fueled by the largest federal government stimulus ever, historic support from the Federal Reserve, and optimism about how quickly the economy is likely to bounce back, the S&P 500 stock index, the most widely watched barometer of the equity markets, finished 2020 up more than 16%. The fact that a pandemic-induced economic shutdown of epic proportion was absorbed by investors and the year ended with stocks at higher level is historic. In March of 2020, investors saw stocks plummeting 34%, starting a bear market. That bear market turned out to be the shortest downturn in U.S. history. Since the U.S. stock market bottomed on March 23rd, the S&P 500 has risen 68%, shattering all-time records along the way. Clearly, investors who stayed the course were rewarded. While equities climbed higher from their March lows, not all stocks recovered to positive territory. In fact, as you start analyzing the year-end market highs, gains in Apple, Amazon, and Microsoft alone accounted for more than half of the S&P 500's 16% total return for the year. If you remove the top 24 performing companies, dominated by tech and digital services, the S&P 500 return for the other 476 companies would actually be negative in 2020. Interest rates were not much help for investors in 2020, and they started 2021 at or near historic lows. Federal Reserve Chairperson Powell announced again at their December meeting that interest rates will stay close to zero for the foreseeable future. Congress also acted aggressively, approving $3.5 trillion in emergency relief and stimulus measures in 2020. This was the largest action in the face of a recession in U.S. history, and it provided some of the biggest aid packages in the world. Entering 2021, as this chart shares, interest rates are 0.09% for the average bank money market and 0.16% for the average 12-month certificate of deposit. Both those rates, clearly less than 1%, can be very unattractive to income-seeking investors. Perhaps nothing has been more puzzling than the disconnect between the equity markets and the economy. The market's rebound reflects Wall Street's optimism about the prospects of 2021, but it also accentuates the disconnect between the stock market's wild success and struggling American households. Wall Street is at all-time highs, but many places are still experiencing shutdowns, high unemployment, overrun hospitals, and economic hardships. Sadly, many local businesses like restaurants, gyms, and small shops may never recover or reopen. Everywhere you turn, you're reminded that there is a deadly pandemic that is responsible to date for more than 340,000 American deaths, and it has left millions jobless and hungry. In fact, as these statistics share, as of year-end, the COVID-19 daily cases, daily deaths, and hospitalizations were all peaking to their highest levels. There is great optimism in the equity markets about how quickly the economy is likely to bounce back in 2021 as coronavirus vaccines become widely distributed. Investors are focused on the future, and the stock market is priced as a forward-looking indicator. Also, stocks remain appealing for many investors because, as we mentioned before, interest rates are so low, making equities more attractive than other assets such as bonds. Our goal is to make sure that your investing plan is centered on your personal goals and timelines. For 2021, caution is still the principal notion for investors. Let's turn to our 2021 outlook. We begin 2021 with a new administration in Washington, D.C. Our job as financial professionals includes reporting and analyzing political activity and relaying how the new administration could impact the investment world. While all changes need to be monitored, some specific things that need to be watched include future stimulus, suggested tax increases, vaccine distribution success, and trade agreements with key international trading nations like China. Excuse me. Many investors are wondering how a Democratic first 2 years of the presidency, House of Representatives, and an evenly split Senate, which allows the vice president to preside over ties, could affect equity markets. While history is nice to look at, it is never a tell-all sign of the future. However, during 10 previous periods of similar circumstances that date back to 1949, 8 were positive for the 2-year period. For 2021, we will be carefully monitoring public policy and the new administration. So what are analysts forecasting for 2021? The stock market enters 2021 with favorable outlooks. Barron's recently surveyed 10 market strategists and chief investment officers at large banks and money management firms on the outlook for 2021. Averaging their year-end S&P 500 forecast, which ranged from 3,800 to 4,400, the group expects the index to rise 9% in 2021 to a level of 4,040. Add a dividend yield of around 2%, and their forecasts show that U.S. stocks could return a total of 10 to 11% on the year. This panel also predicts the U.S. economy will grow by 5% in 2021. This is its fastest rate since 1984. That would be healthy following a year in which gross domestic product plummeted by 31.4% in the second quarter, as the pandemic gripped the country, and then soared by 33.1% in the third quarter. While this forecast is optimistic, we'd like to remind you that we consider your feelings about risk and the markets when we review your unique financial situation and make recommendations. There's great optimism about how quickly the economy is likely to bounce back next year as COVID-19 vaccines become widely distributed. However, for 2021, there are still many uncertainties. Major risks include the potential damage that can be done if the massive vaccination campaign in the U.S. does not run as smoothly or as quickly as investors or the markets are expecting. Also, there's still a major risk to the economic outlook if the recovery is delayed and corporate revenues and profits fall short of expectations. 2021 should be an interesting year, and our goal is to be communicative with clients on how things are proceeding. As a quick recap, remember, 2020 was a year that rewarded discipline. Interest rates are at or near all-time lows. There is a disconnect between the economy and the equity market. A new administration brings new challenges. The effect of COVID-19 is still critical to investors. Also, caution and vigilance are critical. You should focus on your own personal goals and objectives. And as always, call us with any concerns. Legendary portfolio manager Peter Lynch reminds us that you get recessions, you have stock market declines. If you don't understand that's going to happen, then you are not ready and you won't do well in the markets. So, what can you expect from us? One of our main focuses is to review changes for our clients on an ongoing basis. You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. In fact, we will be offering other workshops that focus on tax changes and planning ideas. We appreciate our clients. As a client benefit, you can add names to our distribution list for viewing this workshop and others to come. We hope you will take advantage of this and add 2 names to our list. One of our goals in 2021 is to continue to help others. Some of our best clients were referred to us by existing clients. Please feel comfortable letting us know the names of anyone who you feel could benefit from this information. Again, our goal is to keep you informed, and we thank you for watching our update. Best wishes for a great and healthy 2021. Please call us if you have any questions. Thanks again for listening to our workshop. We appreciate the opportunity to assist you with your financial needs. Remember, at our firm, clients come first, and your health and well-being is our highest priority.